Hey traders, hopefully you're having a good start to the weekend. We're going to be looking at a bunch of different charts here. We're going to start off looking at things related to do with crypto, looking at Bitcoin dominance. We will look at some of the more traditional assets and ETFs and indexes, looking at the S&P. We'll look at the Dow Jones and the NASDAQ as well, just to kind of get a good understanding of the overall market for risk on, risk off sentiment. We'll also take a little bit of a look at the FX markets, just seeing the overall sentiment there as well. And then we're going to end off this video looking at a bunch of different altcoins. We're going to kind of breeze through a bunch of them so we can really try to effectively use the time trying to look at as many different assets as possible, while still actually being able to look at it, understand what's going on, and make a case as to why we think that BTC has either bottomed or there's still a potential move for a continuation downwards. So let's first talk about BTC. I'm going to get my snip here, and then we'll discuss this in a little bit more detail here. So like we've been talking about, we see a series of lower highs, very well respected, especially all along here, key levels of resistance, and we get a nice descending zone, and then we get a series looking at the candles, not the actual wicks, because the wicks go and touch the 32, 31.3-ish K zone, but we do see the bodies of the candles where they're actually closing to create a series of slightly lower lows, which is a really good bottoming structure for this descending wedge. So overall, it does look like it's still contracting, and with the recent price action, it actually looks like we are potentially breaking this zone. So I initially drew up a reverse head and shoulders within this zone, didn't really quite execute the way that we were anticipating, but we did break this major zone of confluence, and we'll discuss that when we get into a smaller time frame. So the major levels that we're looking at before we're really going to gain a lot of confidence is initially the around 33K zone we've already passed. So that's why we're anticipating a continuation of push to the upside. But the next major area that we're looking at is around the 36K zone, which is right around there. If that's the case, then we could assume that that's going to be a potential double bottom formation, because this is not a lower low than this one. You see this low and you see the same low form, so this is a double bottom, and then the neckline for this double bottom is going to be around the 36K zone. That's also the midpoint between our current key level of resistance and key level of support. So that midpoint right there, once it kind of goes above that zone, I think there's going to be a lot more probability that we are going to see a continuation push to the upside. As well, this reversal would be confirmed when we break this right shoulder, because as every single bear has been screaming from the rooftops, we see this major head and shoulders, and a lot of people have been looking at this zone as the squeeze for the reverse, or for the normal head and shoulders, and it's going to be pushing to the downside. So at this point, I do have limit orders set here, here and like even a little bit further down, like 24K, but we are looking at this as a potential breakout for this wedge right around here. And then we see the first major wave right here, and then you see the second one right here, and this is the third final wave right here. 1, 2, 3, and I think that's going to be the final low, and then we're going to be seeing a continuation of push to the upside. And we'll now discuss the smaller time frame and what it looks from there. But from the 12-hour daily, exact same thing. We've already seen the candle close. So if we're really zooming in, this has been a major zone of resistance for quite some time. Touch here, touch here, touch here, touch here, touch here, resistance here, right? If we're going on a smaller time frame, you can see a lot of resistance here. You see increasing buy pressure with that kind of massive final capitulation buy pressure coming in, buying the dip. It would be nice to see an increase in buy pressure, because this is just a consolidation after the initial breakout. It would be a great opportunity if we saw a slight pullback, a no supply candle indicating that there's a lack of supply and a lack of pressure from the bears coming into the market, and then we're going to get a major green candle with a lot of buy volume. That, in my opinion, is going to give me even further validation that we are in a reversal. So let's now go into a smaller time frame here. Looking at the 6-hour, we see this very nice structure that was squeezing the price up, and it finally popped right there. And then let's make that into a green candle, 2 pixel, and let's change the volume here quite a bit. Awesome. All right. So when we're looking at this kind of breakout structure, it does look absolutely beautiful. This major zone of confluence was holding quite well. We see that there was a ton of sell pressure here, but it inevitably did break to the upside. And once it did break, you saw a very aggressive push breaking this major zone. It wasn't like just a slight continuation slowly going up where you see like, for example, like a move like this where you just kind of see it resist, break, retest, kind of continue. This is an extremely aggressive break to the upside, and those usually occur at points where it is a major zone or a major zone of sensitivity. So we've seen a break. I wouldn't be surprised if we do see a slight pullback. We see a tremendous amount of buy pressure compared to the sell pressure within the breakout, which is a great thing to see for VSA. And all that we're looking for is ideally a pullback to validate this 33K zone as a key level of support. Once we get that validation, I think it's going to be looking phenomenal for continuation patterns. And then I think altcoins will really start to pick up once we do break that 36K zone. But we're in a point, let's just draw it right here, where this is opportunities for what we call feeler trades, where you put in not your total amount of capital. You could also dollar cost average. That's also a great option, putting in a certain amount of capital every week or every 2 days, whatever feels most comfortable to you. But because we've already broken this major zone and potentially broken out of this contraction and volatility, the momentum is going from down to sideways, where we've held a low. We haven't gone below this low. So now we're just going sideways. And then if we start breaking this 36K zone, we went from down, making lower lows and lower highs, to making a failure to make a lower low. So we're in a horizontal or sideways consolidation. And then if we start breaking this 36K zone, we're going to be starting the move of higher highs and higher lows, right? Dow theory, that's exactly what we're looking for. So that's going to be a accumulation zone that we're going to be looking for here. And once we reach 36, that's going to be the point where we have a lot of confidence. Leverage trades are an opportunity that I think is a really good thing to take during certain market circumstances or environments. And when we do see this recovery, inevitably, because there are so many people still thinking that we're going to be going down, they're looking at short opportunities, they have limit orders. Like I do have limit orders kind of down below here, but if they don't get filled, that's totally not a problem. I'll just put them in alts that are lagging a little bit behind, and then BTC is going to be the front runner, and then we're going to be looking at these alts as a continuational push that is getting led by Bitcoin, but will outperform Bitcoin during the next half of the bull run. So not much more to talk on a smaller time frame. We're in a nice consolidation zone. Like I did say, this entire area right here is a great accumulation area if you are looking for feeler trades or like dollar cost averaging. And then once we get above this zone, above the 36K zone, then we're going to be looking for leverage trade. The outlook for the price of Bitcoin and most cryptocurrencies are going to be very bullish. So that's going to be the point where you're putting a lot more risk on the line. You're going to have more exposure out, but that's going to open up the opportunity to really make an absolute killing in the best possible way. So that's going to be the outlook for BTC. Really great to see the opportunities. I think are really coming for alts to really rally, but this is just the very start of the reversal. That's the first confirmation. We haven't really seen a great confirmation of a reversal other than this zone right here where we failed. This descending zone, we pushed the upside and it came all the way back down. We really haven't seen that much of an interest from the bulls until this break of this major zone of confluence at around 33K. So it's looking pretty hopeful for BTC. There's still a little bit of consolidation that needs to take place, so I think we all need to be a little bit more patient, but the overall outlook does look very promising in my personal view for BTC right now. Let's now go into the BTC.D chart, which is going to be the Bitcoin dominance. So it should look, especially if you're in a bull market, pretty opposite, where if you see BTC push up deep into a bull market like we are in right now, maybe like back in September, October, November of 2020, the BTC.D chart was actually moving to the upside kind of in November, because that was the initiation of the bull run. When BTC was initially breaking out of the major symmetrical triangle, Bitcoin was gaining back the dominance because alts were lagging behind. At this point right now, I think that alts will be a little bit less lagging behind because we've already are deep into the bull run. But you never know, we could see one last little pop for the Bitcoin dominance chart where Bitcoin starts to rally and then the altcoins come in afterwards. But because we're already in a bull run, I think that people are already anticipating that alts are going to rally. So there's going to be more speculators that are just going to be jumping into the alts, not really providing BTC.D chart to move to the upside. They'll just move down, but that's going to be not a bad position for us to be in, because we're already going to be looking at other altcoins that are looking very promising. So this is looking still pretty bearish. This major zone of around, let's say just under, I can't really say 50%, but around 47, 48% is looking like a pretty strong level of resistance for the Bitcoin dominance. And ideally, like we did say, we're looking for this to continue to push to the downside, where altcoins are going to be appreciating at a greater rate than Bitcoin. All right, a little bit of discussion on the Bitcoin CoT data, the commitment of traders. These two lines are the percent shorts for the 4 largest shorts that are open, basically. And the green line is the 4 largest longs. And what we're looking for a bullish indication is a very small delta between the shorts and longs. And what delta is just basically the difference between them. So then what you're looking for is a tightening between the sellers decreasing their selling and the buyers increasing their buying. That is a position that in the past has proven to be really good buying opportunities. And it looks like we are getting to that same place right now, where you see, if we're really zooming in, a decrease, because we just got that data on the 22nd, or sorry, we got it on the 23rd, sorry. We saw a decrease in the selling, which is a good thing, less supply in the market, and an increase in buying for major whales. So that just logically makes sense that it's a lot more bullish on opportunity. Kind of is interesting that we got it literally at the bottom of like the 29-30K zone. But if we do get the next week's data as a continuation of this trend where you see decreasing selling and increasing buying, we're going to get another point where you're going to see a very tight contraction in the difference between them, or a very small delta. And that's going to be basically a notification or a signal that whales are looking at this extremely bullish, basically, is the overall outcome that usually comes after a very small delta period. So it's looking pretty favorable. Next week, if we see the same continuation, it's going to be looking extremely, extremely favorable, and I'm going to have the utmost amount of confidence that BTC is going to be continuing on. All right, now we're going to be looking at the BTC hash rate with the Chinese exodus of BTC miners. We saw a huge move to the downside for the hash rate. We are seeing it stabilize, which is great. There has been some provinces that have banned the activity of mining BTC more than what's already been done in the provinces that were kind of initiating the trend. So then there have been more provinces that have been kicking miners out more than what initially happened, but it does look like it's stabilizing. This is just like a moving average of it. It does look like it's slowly creeping up, so the hash rate is not plummeting, which is great. I viewed this kind of always as a positive thing, because it is going to create a more decentralized network for Bitcoin, which is a positive thing. But there was a lot of FUD behind this news story here. So that's going to be the CoT as well as the BTC hash rate. We will quickly look at the BTC volatility. It has been dropping quite aggressively, but that's really what we're looking for in a bottom, where you see a tight contraction in volatility, and ideally we're going to see a nice continuation in the increase in volatility to the upside. Kind of a little bit different between the BVol, which is the Bitcoin volatility, versus the VIX, because the VIX never really increases when the S&P is moving up. It only increases when there is basically a massive sell-off, really. So it is an inversely correlated indicator to the S&P, whereas the Bitcoin Volatility Index, we can see back in November of 2020, we saw the volatility increase as we see the price of Bitcoin increase. So there's not that negative correlation. You can see the price of Bitcoin increase substantially as well as the volatility because it's expanding. It's just that much of a volatile asset. So it's looking like it's still contracting, so we're not really broken out of any zone. Once we start to see the volatility increasing, like for example, kind of in November, we started to see this major zone get broken right here, and they started to see the price or the volatility increasing. That's really what we're looking for, kind of similar in this case. Once we start to see the break in the decreasing of the volatility, maybe if we see like a minor zone like this hold, and then you start to see it slowly climb back up, you're going to be increasing the volatility, and that's going to be further continuing the initial momentum. And the initial momentum right now is to the downside, or sorry, to the upside. The initial momentum of Bitcoin is to the upside, but we still have not seen the volatility increase, so we're just consolidating. Once we start to see the Bitcoin volatility increase, while Bitcoin's still doing what it's been doing, slowly moving to the upside, creating a series of higher highs and higher lows, that's going to be an opportunity where we have even more confirmation that we are catching the meat of the trend, or the right move here. Now we're going to talk about the BTC Ethereum chart. This is kind of similar to the gold and silver ratio in the metals market. It's a pretty common tool used to kind of assess if we're in a bull market or bear market for the precious metals. In a very bull market, you're going to see silver appreciate at a much greater rate than gold. Exact same thing with the crypto market. You're going to see Ethereum appreciate at a much greater rate compared to Bitcoin in the crypto market, and vice versa for a bear market. So on a large time frame like the weekly, you see a massive push to the downside after a nice controlled descent all the way from August 2019. So since then, Bitcoin has been underperforming compared to Ethereum. And in the bear market, you see Bitcoin outperform Ethereum, kind of June 2017 all the way until October 2019. But since around like October 2020, we are very, very bullish on the overall cryptocurrency market, and we are in a bull market right now. So we are looking at this descending zone as a nice key level of support, now creating a new level of resistance, holding the price below this zone, squeezing from the wedge. So it does look like we could see a nice little push to the downside, creating even more validation that altcoins are going to be rallying further this year. Where we see a high, yes, you see a lower high and you see a lower high, so you're not really getting the perfect higher highs and higher lows slightly, but this is still a very well structured ascending wedge, and it's looking like it's setting up really well for a further continuation. This is the first level of resistance that we see from the lows that we're getting hit all along here, and you also see, let's take those out, you also see this zone and then the midpoint create further resistance, and it's not really able to push into this zone. If it pushed into this zone, that would be a little bit worrying, because then that would mean that we've already broken this level, and then we're trading within this range, and then if it's squeezing up within this range, that could be a little bit worrying because we're contracting the volatility to the upside within a possible continuation pattern. Not great to see. You're ideally seeing the price contract to the downside. That's what you're looking to see, and then you see a push to the downside, because then the bears are winning in that one, compared to if you have it the opposite way like this, you have the bulls winning, and that's not what you're looking to see. So right now the bears are still winning, and that means that Ethereum is appreciating at a greater rate than Bitcoin, and that's giving us an indication that there is more speculation in the market, and it's a risk on sentiment. All right, so that's going to be my view of the cryptocurrency market, just looking at the tools that we have just in this little couple slides here in our trading view tool. Now we're going to be taking a quick dive into the more traditional markets. We've seen the price nosedive all the way to our major level of support, bounce back, create an all-time high. It was a pretty volatile time, but yeah, we're basically at an all-time high. Did not think that we were going to recover that quickly. I thought we were going to have some hesitation here, but we were anticipating a lot of buy pressure around the 42, 40 to 50 zone, around there, for the S&P 500. So it's just still continuing to go up. If we're looking at the 2-day chart, it's still carrying in the midpoint right here, where we saw this support right here created by the series of higher lows and its major level of resistance, and this midpoint has been in such a strong level of support that we've seen within this continuational push to the upside. This isn't really something I absolutely love to trade because it's just like slowly grinding up, but it's still continuing to the upside, and the other traditional markets, like let's say for example the NASDAQ has at all-time highs, and the Dow Jones is really close to it as well. So we're able to recover within this key level of support right around here, and it's just still continuing to the upside. And then the initial structure that we had within this ascending wedge that melted to the upside still has a target at around like 16, let's say 15.85K. So that's still going to be the target for the NASDAQ, and then the S&P still has a target of pretty high up here, around like 48. So in my opinion, we do still have a while to go for the upside before we are hitting major targets. So the overall sentiment is still going to be continuing, and we can clearly see that with just how bullish things are. And this is the Dow Jones as well. I don't know if it hit an all-time high. It does not look like it. Maybe it did. Very close to it. Might have. Basically right at it or just a hair over, but we are seeing the price hold. Look how fast we're covering from these dips here. Let's go to a different time frame. Let's even go to a different time frame. That might be a little bit too big, but maybe like a 2-week would be really good, because you see quick recoveries, quick recoveries, quick recovery, quick recovery, quick recovery. Lots of recoveries on larger time frames where you see the price dip and then come right back up. Just the bulls are eating every little dip up, and then the target for the Dow Jones is at 38K, 38.3K there. And then looking at the volatility, this is just for the S&P, but the volatility is still decreasing. It's looking a little bit worrying because just how tight we are in the contraction. We might see a little bit of a pop right here, but you do see another descending zone, and as long as we're kind of sticking below this major zone right here, where you see kind of the last series of lows, or sorry, last series of highs, that's going to be totally fine. And then if we're going to get something like this, because we're contracting between this one and this trend line right here, we could see a slight move up, and then we're going to be coming slightly back down, because the VIX is just, it holds support, but it just slowly goes down, and then once the S&P has a aggressive move to the downside, you see the VIX pop. So if you start to see the VIX pop and a worrying structure on the S&P, you kind of look at those two things together. But right now, it does look like the VIX can just continue its move to the downside, for example, like something like this, all the way back down here, and that could be all the way until September, right? So it could just be a nice consolidation for the VIX and then a further continuation for the S&P, and that would work perfectly with what we're looking for, or what we're anticipating for the overall market. So things are looking pretty good in the traditional assets. Things are getting bought back up very quickly. It's a very risk-on environment where people are speculating. People are assuming that things are going to be better in the future. There's not much fear. There's not much uncertainty. So things are looking pretty good. Gold and silver is doing a lot less positive compared to the traditional assets. Just quickly taking a look at gold, it is recovering from its major spill it had, but it's a pretty slow recovery. I wouldn't be surprised if we see some consolidation between the 1900 and 1760-ish zone, where we talked about this potentially being the reverse head and shoulders. This is the left shoulder, you got the head, and then this is the right shoulder. So you could see a slow recovery, and once it breaks around 1900, that's going to be an opportunity to look for long opportunities in either futures markets or equities related with gold, all that stuff. But until then, I think it's a little bit sketchy, or it's just capital that is going to be deployed, and it's going to be wasted capital until it starts to actually gain that momentum there. Something that is interesting that I'm looking at more is going to be oil. If we take a really zoomed out look at oil, we see that it's a major wedge, like absolutely monstrous, but it's extremely well respected, and we just broke out of it. So my outlook for oil is very bullish in the long term. In the short term, obviously things can change, but in the long term, I do expect oil to be continuing its push to the upside. It makes sense. For example, like when we had the inflation crisis in the 70s, there was also the oil crisis. We had gold and silver absolutely balloon after, but the oil crisis was a little bit before. Not saying it'll happen right now, but it does kind of look like oil setting up earlier for a massive push to the upside. And then we might see, once the fiat currencies are like really done, where it's pretty common knowledge that they can't hold value, then the gold and silver trains start to push up. That could be a possibility. I don't exactly know, but it does look pretty solid. We see massive wick to the downside for the weekly chart, where we already have it closed, so it's a validation that there's a ton of buy pressure buying the price at the previous level of resistance around 67. So it does look pretty solid. I think oil and oil-related assets are going to be a good long-term position, is just my personal view. Obviously, don't take that as financial advice. Do your own due diligence, but that's my personal opinion. I'll definitely be looking into some equities that will give me exposure in that kind of long-term view aspect. So we'll take a quick look at the FX markets, and then we're going to take a look at some crypto. I'm going to have a quick drink, and then we're going to jump right into the FX markets here. Okay. So, let's first take a quick look at the relative strength. It does look like the Japanese yen is actually doing better than all other major currencies. This zero line is where the Japanese yen is, and then we've compared the major currencies to the Japanese yen, because the Japanese yen is going to be at the second half of the ticker, or the pairing. It's just like that. I don't exactly know why. But we do see that the US dollar is at a close second, and then we see GBP, Euro, New Zealand, CAD, and then AUD at the very bottom there. So what this is indicating to me, at least, is for risk-off situations, you're usually going to have the US dollar as the strongest one. And then Japanese yen is also a risk-on asset, or risk-off asset, sorry. So then if there's fear, uncertainty in the market, capital is going to be flowing into United States dollar and Japanese yen. If it's a risk-on environment where there's a lot of speculation, there's going to be capital flowing into risk-on currencies, which would be the Canadian dollar, New Zealand dollar, the Australian dollar. Euro's kind of in the middle, more of a risk-off. GBP is a little bit in the middle, more of a risk-on. But AUD, New Zealand CAD are the risk-ons, and US dollar and Japanese yen are going to be the risk-off. So it kind of does look like we are in a slightly risk-off environment or sentiment. Looking at the FX markets, let's just take a quick look at the smaller time frame here, looking at the 6 hour. So when you're looking at the 6 hour, obviously it projects an extremely different view, and that's why having your multi-time frame analysis is an extremely useful tool. Looking at a smaller time frame at the 6 hour, it's just such a different story that it's saying Canadian dollar at the very top, 2.3 is a massive push to the upside, and a difference between one currency versus another in such a short time frame from July 19th. We see the New Zealand dollar, GBP, AUD, all the risk on currencies are doing much better than the US dollar, the euro, and the yen. So this is giving me a lot more confidence that we're in a risk on sentiment. There's speculation occurring, there's less fear, less uncertainty, and that's a really good market for cryptos to do well. Let's keep that at the daily. But that's a really good thing that you can just build within your trading tool dashboard very, very easily. Or like your panels. I'm not sure exactly what it is. But something to note is we're actually creating a nice little wedge here. It would be nice if we see a rejection, but this is basically kind of like the, not do or die time, but we see this nice zone here. Maybe that's not going to be perfectly aligned. But you see this nice zone here. If it does break this series of lower highs, then we're forming a double bottom formation. That's not going to be absolutely wonderful, because everything that we trade is dollar denominated, meaning we trade gold, it's measured in dollars. How many dollars per ounce? We trade equities. Okay, what is the stock cost? It's X dollars. We trade cryptos. Okay, how much is that cryptocurrency? You know, Bitcoin's at $33,000. Whatever it is, you are denominating the measurement in US dollars. So if the US dollar is going up in price or in strength, that means if Bitcoin's price remains absolutely stable, that means it's going to take more Bitcoin to buy the dollar, basically. So it's going to be harder for Bitcoin to appreciate if the dollar is already moving up. So what you want in an ideal situation is, because they should be inversely correlated, you want to see the dollar move down and things like Bitcoin move up, because they are paired with each other, right? If Bitcoin is going to be completely stable and the US dollar is going to go down, the price of Bitcoin is actually going to increase because it takes more dollars to buy one Bitcoin. But the inverse is also true. If the dollar is moving up and Bitcoin's remaining stationary, absolutely flat, it's going to take more Bitcoin to buy the increased price of $1. So ideally, we want to see the price of Bitcoin move up and the relative strength of the dollar compared to the other fiat currencies go down, because there's all these different assets that are paired to the dollar. And also the fact that the dollar is a very risk-off asset and a financial instrument, I guess you could say. So that's also another reason. But that's my overall view. We really want to see it push to the downside. If it doesn't, it is going to be harder for assets to move up. But that doesn't mean that we can't have the dollar move up, things like gold and silver move up, even like equities move up, as well as crypto move up. Ideally, we said we're looking to have the dollar move down and crypto move up, but we can have an environment where dollar moves up and crypto moves up. Like Brent Johnson said in his dollar milkshake theory. Definitely check that out if you don't know about it already. Definitely a pretty interesting read or watch, however you want to consume your content. Basically looks at it in a very global macro view, looking at and considering many different facets of the market, like globally, internationally, that most people don't when they are thinking about the dollar. Exporting dollars, all that stuff. It's pretty interesting. So this is going to be the next little series. I'm going to take another little drink, and then we're going to jump right into the altcoin market. All right. So this is Ethereum, second largest market cap in the cryptocurrency market for an alt, or I guess the largest market cap for an alt, but the second largest in crypto altogether, BTC holding the #1 spot. And it does look like we are basically at the completion of this formation here. This is a wedge formation. Let's take a nice little draw right here. So we had the squeeze that we had right here, and then we had this massive blow off top. And sometimes, like for example, with Bitcoin, you have these blow off tops where it's just going almost exponential. It's just going up so aggressively. There's so much buy pressure. And when it inevitably does fall, that kind of major blow off top is not incorporated within the chart. Bitcoin's large time frame within the squeeze before we saw the down move in 2018, that was also the same thing, where we saw such an aggressive blow off top that we did not incorporate it within the structure that made our next move either to the upside or downside. These do occur in very volatile markets, which cryptocurrency is. So we have to take that into consideration. So we had the blow off top, and then we started our 1, 2, and then 3 waves. So this is wave 1, wave 2, and this is wave 3. And I think we've completed wave 3. Now we could see a slight pullback and then a squeeze, like we did say for major zones of confluence right around there. You could see like a slight squeeze where it's like this. And that is ideally what we're looking for. We want that contraction, because in order to have a major explosive move, you need that contraction in volatility, because in order to have an expansion in volatility, you need that contraction. We haven't had a ton of contraction. We did a little bit right here, but it would be nice to see Ethereum have a slight contraction and then maybe resist this zone a little bit, pull back, kind of test this area around like 2.05K, like 2050, somewhere around there. That'd be a really good opportunity, but it does look very, very solid. And this major zone right here, oh, wrong one. This major zone right here around the 2400, that's going to be around the 36K for BTC. So it's going to be a similar sort of zone. So for Ethereum, it's going to be like at 2400. The 2400 for Ethereum is my 36K for BTC. if you look at the chart on BTC, the 36K is a major level of resistance that if it goes above it, I'm going to have a ton of confidence. I'm going to be looking at leveraged opportunities. And the same thing goes with Ethereum at the $2,400 level. So it's looking pretty phenomenal. I think this is a really great accumulation zone right around here, like in between the 2K zone and the 24K zone is a good place to dollar cost average. Not a good place to leverage trade in my opinion. Once we get above the $2,400 zone, that's going to be the point to look for more leveraged opportunities, or even look for extremely speculative meme coin plays that were doing very well back in the spring and late winter of this year. All right, so that's going to be Ethereum, and then we're going to take a quick brush through at a bunch of the different platform tokens that we have here. Let's just go on the daily for Solana. Solana looks awesome. It's holding our key level of support really well. Still hasn't broken out. Still contracting in volatility. Same goes for Cardano. That $1 zone is so vital. Look how well it's respected. Extremely key level for Cardano. It's looking pretty strong. And you see both with Solana and Cardano, you see that kind of blow off top that you don't incorporate throughout the entire chart, because you see 1, 2, and then a little bit before, a little bit after, you see a major zone, but there is a blow off top. And you can see the exact same thing for Cardano, where it's looking pretty similar. The level of support for Solana is at like 25, Cardano is at $1. Pretty similar structure, so I'm expecting them to kind of move in similar directions, because Bitcoin is going to be the main market mover in terms of direction, and then alts will follow. So if Bitcoin is going to be reversing, moving to the upside and bottom and completing the bottom, that means that Cardano's $1 range has been the bottom and Solana's $25, $26 range has been the bottom as well. DOT has broken out, but I'm definitely a little bit wary, just because DOT has been a lot less relatively strong compared to things like Cardano and Solana. Like for example, DOT's key level of support would have been around $29 with where it has been in relative to like these other assets right here. Like for example, back in February or March of 2021, Cardano was still holding the dollar mark. But then Polkadot was at the $29 support. Now it's at the, let's say, $10 support. So relatively, Polkadot has been a lot weaker compared to Cardano, and that's relative strength weakness. So if you're looking at good opportunities to start getting more exposure in the altcoin market, picking something that has been relatively stronger like Cardano, like Solana, would be good opportunities in my personal opinion. Now talking a little bit about DeFi, SUSHI has been holding the 670 pretty well, but I'm primarily looking at Uni, Comp, and AAVE. AAVE looks a little bit too similar to SUSHI. It's kind of expanding, not doing great. Comp's just a little bit confusing. I'm not really seeing like a well-rounded structure, like something that I can actually use as actionable, tradable information. But Uni's doing pretty well, holding this around $15 range. Yeah, around 1550-ish range for a key level of resistance. So Uni's looking well. Comp and AAVE for me are longer term investments. I'm just slowly dollar cost averaging into them. I don't really own any SUSHI, and I also own Cake as well, but Uni's one that I'll be looking for to potentially leverage, where Comp and AAVE are just longer term investments, but they still look pretty solid. AAVE does look a little bit better than SUSHI because it's relatively a little bit higher from the midpoint, but overall, I think that Uni is looking the best for potential move up in the short term here. Something that we did discuss within our Discord is something called Quant. I'm not the best person to ask about this in terms of information. I literally just learned about it yesterday. It's pretty unbelievable. It's just basically connecting distributed ledger technologies for enterprise level businesses, opening up mid-level businesses, enterprise level businesses, to the world of crypto. Not just blockchain, but other DLTs as well. Distributed ledger technologies like Hashrate uses one. Radex is, I believe, another one that uses a different type of distributed ledger technology. So it's basically able to connect all these different DLTs for businesses to use easily without much friction. So it's a pretty cool idea. And when you're looking at the relative strength of Quant, it's pretty unbelievable. Like if we're taking this relative strength, we're taking pretty big step back. Matic's obviously doing very well, but if we're taking back like from like late May to June, we've seen basically a lot of cryptos within a band, and then you see QNT just absolutely on a different level. And if we take a snapshot that's a little bit closer, like even if we're going to like a 4-hour chart, you see QNT still near the top. So it's something that I'm definitely going to be keeping an eye on. I did have a order placed for $60 as a limit order. Stop loss at like a little bit over or a little bit under 40. First take profit is like 180-ish with a risk reward of 6. And that's going to be my first TP. I'm assuming that's going to be continuing to push further, but it's just good to have some level where you might be looking at taking some profit if you're going to be looking at a trade. But you got investments, trades, and obviously those are going to be working differently. But this is a really good, in my opinion, an opportunity. I just would like to see it drop a little bit more just because I like to get that prime entry. But if I don't, worst comes to worst, if we're taking a look at a smaller time frame, kind of does look like it's broken, but this is a major zone that I would keep an eye on around right here. And it has slightly broken this zone as we can see. So if it does pull back to around like the 75, I might have to adjust and then use this as the low and then enter somewhere around there. So you're still able to get like not a bad RR, 3.94. Maybe move that to like 200, depending on how far you want to go. Yeah, that's not so bad. But I'll have to figure it out. Use the tools that I have with me. But right now I have a limit order at 60, stop loss at 40. There we go. And take profit is currently at 180. It's just the trade plan that I have for this possible trade QNT. But it does look pretty solid in terms of the structure and the relative strength. Quick look at Cake and Binance. They are looking pretty similar. They're contracting pretty tightly, really reducing the volatility. So I do expect it to complete pretty soon in terms of finalizing their bottom. It's already hit its bottom 3 different times. Cake's bottom was around $10, where Binance coin was around like $250-ish. But overall, it does look pretty similar with how they're looking. Like kind of if we go like that, that's a pretty darn similar looking chart. So I'm going to be expecting them to kind of react similarly for different market conditions that we will be seeing. One thing that I'm looking at is actually Doge. Looks pretty solid. It's looking like it is going to be doing better, quicker than most of the other alts because it's already broken this descending zone. We've already seen a break and retest of a major level of confluence of this zone right here. We've seen it test multiple times. It's looking pretty decent. You're seeing increased R-vol. And also Elon's talking about it a little bit more with the B word. There wasn't a whole lot of like interesting conversation said, yeah, Elon said that he was invested in BTC, Ethereum, Doge. And he is, I guess, now taking the side of the bulls, so he's just flip-flopping. But anyways, this does look pretty solid. I personally don't really have any exposure in Doge. I think it's a good vehicle to trade in, but for an investment, I just think that there's better options in the world of crypto. So that's my overall outlook. We checked the relative volume. The overall cryptocurrency market, excluding BTC, just the altcoins, is still looking pretty solid. We're seeing a nice support hold right around here, around like 620 billion in terms of market cap. So if we do start to see a potential break of this nice slow descent of lower lows, lower highs, if you're able to get a break in the 795 billion resistance for market cap, that could be a really good opportunity. Like if it starts to break this zone, that's going to be a good opportunity where it's going to give me even more confidence that we are going to be continuing to the upside. So it's looking pretty good. It does look like we are completing the bottom. It's not ready just yet for a breakup, but I think in time we will be seeing a recovery with the current price or the current low being the low of this bottom. So let's switch back to Ethereum. Let's open up BTC. And let's finish the video. So thank you very much for watching. That was the overall view of the, not just cryptocurrency market, but all the markets. I mainly trade in the crypto market really, and I use the other asset classes as tools to measure the global sentiment. So hopefully that was informative. If you did enjoy it, if you thought it was useful, educational, it would be appreciated if we get a thumbs up. And if you like watching these videos, it does mean a lot if you do hit that subscribe button. So thank you very much for watching, and until next time, have a good one, traders.